Today, SEC Chair Gary Gensler makes a pitch for more agency funding, in part to protect investors from the, quote, wild west of crypto. The agency takes its first major step in deciding whether to approve the latest round of spot Bitcoin ETF applications. And after Ripple's partial win against the SEC, Custodia Bank CEO Caitlin Long discusses where regulation in the U.S. could be headed amid her company's legal battle with a different regulator. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices are in the red today. As of noon Eastern, Bitcoin dipped further below the $30,000 level. Ether dropped under the $1,900 mark, and Ripple's XRP token fell by 1.25%, almost exactly 1 week after the firm notched a landmark win in the SEC case over the cryptocurrency. Okay, let's talk about the top stories. SEC Chair Gary Gensler cited the, quote, wild west of the crypto markets as part of his case to increase the agency's budget. As you know, the SEC has been increasing its efforts to crack down on crypto crime. Speaking before the U.S. Senate Committee on Appropriations yesterday, he asked lawmakers for tens of millions of dollars in extra funding, in part to protect investors from crypto markets, which he argued are, quote, rife with noncompliance. During prepared remarks, Gensler noted that investors have put hard-earned assets at risk in the, quote, highly speculative asset class. And sticking with the SEC, the agency has accepted to review applications to create spot Bitcoin ETFs from 6 firms. Those include BlackRock, WisdomTree, Fidelity, Invesco, Bitwise, and VanEck. This marks the first step in the agency's process of deciding whether to approve the latest round of proposals. Next, a North Korean hacking group reportedly tried to steal digital assets by targeting crypto companies through their IT management providers. Earlier this month, JumpCloud, which provides IT services like single sign-on and API services, announced a security incident involving a sophisticated nation-state-sponsored threat actor, which was targeting a small and specific set of customers. Well, according to Reuters, those hackers were targeting crypto companies that used JumpCloud in an effort to steal digital currencies. North Korea has been linked to hundreds of millions of dollars in crypto hacks in recent months, including Axie Infinity's Ronin Bridge and DeFi platforms like Atomic Wallet. Last, Kuwait's primary financial regulator has prohibited the use of crypto for payments, investments, and mining activities. The Capital Markets Authority's prohibitions are in an effort to meet requirements set by the Financial Action Task Force to try and prevent money laundering and terrorist financing through crypto. The regulator warned that companies are not allowed to provide any kind of crypto-related services and placed an absolute ban on all digital asset mining. The notice said that anyone who violates the prohibitions would face penalties. All right, back to the U.S. for our main story. Regulation in the crypto space has been in focus, especially following Ripple's partial win in the firm's fight with the SEC. Well, Crypto World's Talia Kaplan spoke with Caitlin Long, the founder and CEO of Custodia Bank, a Wyoming-chartered special-purpose depository institution, for her insight. She weighs in on what the development could mean for regulating the industry, and she also reacts to the Fed launching its instant payment service today as Custodia Bank is in a legal battle with the regulator.
There have been several developments in the crypto space since you were last on our show back in March. Just last week, Ripple scored a partial victory when a federal judge ruled that the crypto company did not violate securities laws when issuing XRP to retail investors. That decision marked a major blow to the SEC's efforts to regulate the crypto industry. What was your reaction to that ruling, and what do you think the implications are for the industry?
Well, I had the same reaction a lot of folks did, which is that it was a partial win, but an important one for Ripple, for XRP. And the implication is that if that decision stands, that many other tokens that the SEC has been maintaining are securities, including, by the way, potentially stablecoins, are now not securities when they meet the judge's standards. Now, that said, it is a district court opinion and it is likely to be appealed and it may not stand, but you saw the reaction pretty much across the board of US exchanges immediately relisting the XRP token, and that speaks volumes.
And I'm especially interested in your take, given you do have a law background, so thank you for that. But just this week, Ripple's general counsel said the firm is confident that U.S. banks will want to start using XRP for cross-border transactions after Ripple's partial victory in its battle with the SEC. You're the CEO of an institution here in the U.S. which specializes in digital asset payment and custody solutions for businesses. So I'm curious to get your insight on that statement. Do you think that will hold true?
I think the banks are in a different zip code than the securities firms, and the statements from the bank regulators have been universally negative, including on the use of tokens and any payment rail other than the one that the Fed is literally introducing the 20th of July, which is FedNow. The Fed in particular has taken steps to shove aside anyone who's using new payment rails that would compete with its own system.
You would know this firsthand because of your ongoing legal battle with the Fed, correct?
Yes, although it's public that the Fed openly questioned banks being involved in new payment systems, and it made it clear they don't want banks to hold digital assets on their balance sheets, which of course is going to have to be required if the bank is actually engaging in payment system use of the token. It's not something where they can keep it entirely off balance sheet. So the securities battle that the digital asset industry is having has been partially won. Let's see if it sticks. The banking battle, as you know, is just beginning. But it's interesting because Custodia has company in its lawsuit against the Fed. There was another lawsuit filed by a non-crypto company, but a company engaged in payments that was unlawfully denied a Fed master account, just like Custodia was. And it brought suit at the end of June. What's interesting about that suit is it brought suit in the Ninth Circuit, which is where most of the fintechs in the United States are located. So the Fed might get what it professed that it feared if it let Custodia in, which was a lot of fintechs getting uninsured bank charters and getting Fed master accounts because the Fed can't unlawfully withhold them. And now the seal proverbially has been broken. And anytime the Fed denies a master account, most likely it will end up in a lawsuit.
Well, it certainly will be interesting to see what happens there. But we recently learned that NASDAQ is halting its plans for a crypto custody service. During NASDAQ's earnings call, CEO Adina Friedman said the change is a result of the shifting business and regulatory environment here in the US. What's your reaction to that? I'm specifically interested in your take, given your company, Custodia Bank, serves as a custodian of digital assets, and given your ongoing lawsuit with the regulator, the Fed, after the Federal Reserve Board announced its denial of your application to become a member of the Federal Reserve System back in January.
Right. Well, I think there are a couple of factors at play. One is there's a clear incumbency bias. The Fed approved Bank of New York Mellon and denied Custodia, even though Custodia's revised business plan is exactly the same as what Bank of New York Mellon's is. So leave the ethics aside of that. But the other issue that I think NASDAQ was potentially running into was the accounting bulletin that the SEC put out last year, SAB 121, which requires the SEC filing companies, which of course NASDAQ itself is one, to comply with accounting guidance that requires the custodian to treat the asset as if it were owned by the custodian, as opposed to keeping the assets off the custodian's balance sheet. What that means is it attracts a capital charge. And we've seen that some of the large financial institutions have backed away because of that. And so what's interesting about the private companies like Custodia is, as a non-SEC filer, that does not apply to Custodia, but it does apply to some of the big banks. This is one of the insidious ways that the SEC attacked the digital asset industry, was through that accounting bulletin.
What do you think is next for crypto regulation here in the US? This week, we learned that the Senate is getting ready to take another stab at regulating the crypto industry with a new bill that would place stringent anti-money laundering requirements on DeFi protocols. And last week, Senators Lummis and Gillibrand unveiled their revamped crypto bill. What do you think will happen with that? And in general, do you think lawmakers here in the US can agree on a comprehensive regulatory framework? If so, what do you think is a realistic timeline?
Well, I still think it's less than 50-50 that something gets done before the end of the Biden administration, because Biden and Senator Warren are virulently anti-crypto, period. However, the Ripple decision, which certainly the SEC wasn't expecting, does throw into even further uncertainty and disarray the U.S. crypto regulatory structure, while other countries are moving full speed ahead. And it is putting the U.S. further and further behind. So there is a chance that something happens. In terms of the Lummis-Gillibrand bill, that is a serious bipartisan attempt at a comprehensive regulatory structure. Does it have a chance at passing? It remains to be seen. It really does. It does matter whether the Biden White House wants to get behind something like that or not. And I think it's still less than 50-50, even though the chance went up significantly post the Ripple lawsuit.
Long also weighs in on the implications of financial institutions filing for spot Bitcoin ETFs. And you can check out her full interview over at cnbc.com/cryptoworld. That's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.